Ladies and gentlemen, here we are today for the FOMC Live, and if you are new, we are about to witness some madness unfolding in the charts. It's FOMC. This is where we find out today if the Federal Reserve is going to decide on pausing the interest rates with the hope of them not increasing them in the future. That's what traders are going to be waiting for today. But today, we're going to be waiting to see if Bitcoin is going to pull the dirty. Is it going to take a dump? Or is it going to start soaring to the upside and everyone's back on crypto happy days? Well, we've already had some nice little bit of flavor in the charts. Euro's been making that nice move, giving us the heads up that the dollar dominance is ready to just completely collapse. So, ladies and gentlemen, if you are new to the channel, mad love to everyone. I hope you're all doing well. We've got a lot to get through. The FOMC projections, the federal funds rate, and the statement come out in the next 15 minutes. Okay? Well, just shy of 13. Now, once that is done, that gives us a 30-minute window to check out what's moved, what isn't going to move, what has moved. And then we're going to have the press conference, which I'll be showcasing live to you guys, and we'll be listening in to see what Powell says. But I believe the bulk of everything is going to happen in the next 10. So let's have a conversation, guys. Here we go. All right, then. So this is what our setup's going to be looking like, ladies and gents. What is going on? Is everyone doing well? Can you hear me? Can you hear me loud and clear? Is the sound all good, guys? Can you hear me? Just give me a heads up. Yes, sir. No, sir. 3 bags full. Where's the flavor at? Where are my likes at? Come on. Now, this is what we're going to be witnessing. All right? Bitcoin so far hasn't done much. We've got the book map to the left of us, and we've got a nice little order at the top side here at 26,200 with 593 Bitcoin orders. I'm paying close attention to Euro. I'm paying close attention to dollar dominance. There has just been this whipsaw price action today where they have just completely dropped it on the dollar, and now they're going to be looking at keeping Euro in a specific zone. The news that comes out in the next 10 is going to move the market. Then Powell is going to get scrutinized. He's going to be asked a question based on what the statement and the projections say. We're looking for a terminal rate. That's what traders are waiting for. NASDAQ and S&P trading from their highs. Everything's going a little bit quiet, so we just got to sit tight. Do not open trades from now until the FOMC press conference. Don't do it. You're going to get thrown about. You want to be very careful. Keep your capital, locking your stops, make sure that you've got profits locked in so it doesn't matter what happens. If the trade is free, happy days. All right? So let's get with the flavor. Right now, Bitcoin, 25,956, not really giving us that much movement today. It's stalling. And that's what I like about Bitcoin, because Bitcoin usually likes to, it kind of gives us a clue what could happen because it's not done anything today. And it hasn't done really anything over the last few days anyway. If we go into the 1 hour time frame, you can see, just look at this. Price is just stagnant, not doing anything. We just expand this out, happy days. Look, nothing has been happening with Bitcoin. Let me expand this bad boy out so you guys can see bright as day. Awesome. There we go. So yeah, nothing. There are 2 ways to trade this situation, all right? And it's not really an ideal way to trade. You've got the wick up here, which principally we would anticipate Bitcoin to try and attack if the news is good. But then at the same time, we've got another wick down here. And that would mean the news is bad. Okay? So we've got to be very careful with what we're doing right now, guys. And we're going to get the party started up. I mean, 10 minutes, man. We're going to see some madness unfolding very, very shortly. I'm excited. I just noticed as well, going over to the other assets across the board, gold is holding out. It's coming down ever so slightly. We're going to know if the truth is going to happen and they're going to come down and recover this vector candle on gold. This is what it's about right now. It's like investors are going to say, right, do we go into gold? Do we go into commodities? Go over to oil? Look what oil's doing. Oil's holding out. All right? It's all brewing. And there's going to be a sense of calm in the marketplace. And you'll feel it just before the news comes out. All right? Going over into here. Right now, we've got a lot of liquidity coming into ApeCoin. A lot of sales have come in, but not really that much, just shy above 10 million. GMT, same story. BNB still holding out. Let me just quickly go up and look at BNB because we're seeing some big movements with BNB. Hold on a second. BNB USDT. Going to be using this time, guys, to just go through the charts. Give me some of your coins. And before we start getting to the nitty-gritty of things, here we go. All right, BNB looking like it's showing a bit of promise, man. But again, it's news announcements. That's going to dictate what's going to happen next. And if you're going to start placing trades by thinking, okay, maybe if I place an order up here, and then if it hits it, happy days, it continues to hit it. And then if you place an order down here, you think, okay, hits it and continues. But what happens when price does the following? Spike up, gives you that satisfaction, your order's filled, comes back down, and then comes back up. That's the messed up thing about trading news, guys. They can bully the ranges. So that's what I'm saying to you. Just be very, very cautious. I'm looking at the chart with Bitcoin. Let me just quickly bring up the book map just before we prepare for it. We have got Bitcoin on the book map still at the VWAP from earlier on today, man. Nothing has been happening, okay? Just holding out across the VWAP. Now, looking at your coins, okay, let's have a look. Let's see what you guys want. We've seen some movement in the chart. That's awesome. ADA, unfortunately, ADA hasn't had a great time. Look at that nasty move to the downside with the SEC declaring it as a security. I mean, would it be good for crypto if these assets were a security? Quite frankly, you kill the purpose of the coin, but at the same time, you encourage Wall Street to step in because there's regulation behind it. So it's a taboo area, to be quite frank with you guys. What else have we got here? NEAR. Let's have a look at NEAR USDT. Bybit, yeah. See, everything is just stagnant, holding out, waiting for that moment. We've got 7 minutes, ladies and gentlemen. Just need to go over to USD JPY. JPY coming down. I really need to see this bad boy drop. This has been holding out for so long. We are in an M formation zone right here, and it's been trading sideways, not giving us anything. GBP USD. Trading up nicely right there. That's happy days. Euro still bringing the flavor right there. The yen itself. Let me just go over to the yen. Actually, no. I'm going to go over to some stock. Let's see what Tesla's saying. How's Tesla faring? Still holding out at the highs. I mean, it would only make sense that everything drops first. That's what we would be expecting. And it's all going to be in the next 6 minutes, ladies and gentlemen. What else have we got? DOT. I'm going to look at DOT. USDT. Here we go. Coming back up. See, DOT's managed to make the recovery back up. Whereas, I mean, Solana hasn't, but, well, trying its best to get back up. Okay, so if you see all of the altcoins that have actually got this similar setup, ideally go with the altcoin that has the most volume. Okay, because that means more money is going to come in to try and force it to move higher. There'll be more of a conviction. If you're trading an altcoin like NEAR, for example, that is a lightly traded coin, where it doesn't have that much volume, it can spike up to only come back down. It won't sustain. Okay, so you've got to be very careful when you're looking at that. Just looking at the USDT chart itself, the principle would say, right, that if they can make USDT come back down, I mean, I'm looking at the ranges, all right? It just looks like it's getting ready to come down and come back into these vector candles. That's what we're waiting for right now, okay? Quickly go back into Bitcoin. Man, I can smell a barbecue or something is on fire. And it ain't me. Seems like everything's all good. Mad days. That'll be awkward. That wouldn't, wouldn't it? My stream starts setting on fire. Here we go. We've got some movement right now on the book map. I want that 26,190. Can you imagine if 28 comes in? That'll be very interesting if 28 comes in, because that will be where the liquidation points are. And we've had a lot of guys going long, man. Look at this. Guys are going short, going long. And this was done only not so long ago. Let me refresh this bad boy. Link, you want me to look at Link? Give me a second. I'll have a look at that in a sec. Here we go. We've got liquidity coming up. A little spike up will be nice. 26,100 with $446 million worth of long liquidations. 26,100 is not too far away, guys. It is not too far away and will be consistent with them going back into the vector candle zone. Let me just split this up here. We're getting closer and closer into it, guys. Dollar dominance at the lows right there. Getting ready to pull some flavor. 4 minutes, man. We should see the market make a move before that. That's what I would ideally be looking for. What's this? Let me have a look at Link. Some of your comments, man. Who's talking about farts, man? What's that? What's that story about? We ain't going to be bringing no flavor yet until the news comes out, man. Here we go. Link. Look, red vector candle recovery. It's starting to work, okay? Has this move been motivated to send everything up? That would be an ideal scenario. But again, news orientated. They can move it up and come back down again. Just Just be careful, ladies and gentlemen, okay? Be very cautious with that. Looking on some of the news as well, we've got some news hitting the markets. The bonds are actually dropping, which is people are waiting for the Fed to say they're going to pause. What do we mean by the yields? So if we go over to the yields for a split second, this is going to help you understand the flow of money, all right? 2-year yields sort of coming back down, not really coming down as aggressively as I'd want them to, but it'll be good if they do actually come back down, maybe come down to 4.5. That'll be good news for us. But the bonds, they're trading well. Nice little W formation on the bonds. There's a behavior right here where it looks consistent with accumulation. It's like they're loading up, all right? I want to see 97 on the bonds. That's what I want to be seeing. The volatility index is trailing lower. Go to the 1 hour time frame. If the volatility index goes down, that means assets are going up. Okay, but if the volatility index goes up, assets are going to take a nosedive. Okay, so just be very careful. Dollar dominance still coming up. Euro's coming up and dollars coming up. It's all starting to happen. 3 minutes, ladies and gentlemen, till we get the party started. Let me get the chart set up as well. Oh, my days. My heart is racing right now. My heart is actually racing. Whew. What we got? ETH whipping. Yeah, Ethereum's being a bit of a pain in the ass, to be honest with you guys. It's not really giving us anything. Right. Here we go. And bring the chart there. Can we see? Happy days. Bitcoin just above me right there. Awesome. Cool. We want that wick. But it's what it does beforehand. That's what you got to be mindful of, guys. That's what you got to be mindful of. They're coming away from the VWAP, which is decent. 684 Bitcoin orders at the 26,190. We're going to start seeing some action very shortly, guys. Dollar dominance down there on the right. Bitcoin, Euro on the top right as well. The reason why we got Euro up is because when dollar goes down, Euro goes up, and it's usually a bit of a good indication that assets against the US dollar are going to keep going up if dollar keeps going down. So we've got some flavor coming in, guys. Here we go. 2 minutes into it. Gonna have to act with speed right now, ladies and gentlemen. Gonna have to act with some very good speed. Here we go. Bitcoin coming in now, 688. Keep an eye on this 688 Bitcoin orders right there. Hopefully it stays in the chart and that Bitcoin can actually spike up towards that 26,100. Nearly close towards it, guys. Here we go. 1 minute in. I've got to be focusing right now. I've got to be so focused. They're going to reveal whether there's going to be a pause or not. They should shoot everything up if the word pause is mentioned. With interest rate increases, that's fine, but the market's going to price it in now. So we've got to be very careful. Here we go. We're in. Here we go, guys. Be careful. Be very careful with this. Be very careful. We could get gap ups, gap downs. Are they going to sustain this move to the upside? Will the market hear what it wants to hear? Here we go. NASDAQ making a move. I'm just focusing on other charts. Bitcoin starting to bring some flavor. 681 on the orders. They're taking a little bit off the table. Nothing's happened yet. 50 more seconds. They're not giving us anything. You're long on Bitcoin. 200x just sold my house. Wow. Obviously, I know that is a joke. Mad love to you guys. Look, guys, once this comes out, this is going to pretty much dictate the rest of the session, okay? And going into Asia. Now, last FOMC, we didn't really have that much behavior. Here we go. The article is out. Here it is. Dollar dominance not really doing anything. Euro is holding out right there. I'm patiently waiting here. No gap. NASDAQ holding. Just going to keep an eye on NASDAQ. If they do hear what they want to hear, is the idea of a pause in sight. Nothing. Nothing is happening. Are they going to do it? Will Euro continue with its nice flavoursome move to the upside? Here we go. There we go. The trickery of market maker, man. Look at that. Look at that. They screwed it. Quick snap to the downside. Here we go. Look at Euro. Treacherous behavior. Unbelievable. Look at that. Dollar dominance is shooting up. Be careful. Bitcoin's on its way. Going to hit that 26,190. Should be good news. They're reacting to the market right now. NASDAQ's taking a nosedive. Does that suggest that they're not going to give us a pause? I'm not hearing anything yet until the statement is actually released. Euro's taking a bleed to the downside. Unbelievable. Unbelievable. Setting up the ranges, man. That is brilliant. Absolutely phenomenal. Look at that. Bitcoin's still holding out. Just don't do anything crazy. Red vector candle on euro right now. They could be setting up for a reversal. Just be very cautious. I'm not seeing anything in terms of the news. What's the news saying? 10 years not really giving me anything. Is any news coming out here? Should have an article out coming out saying, I'm not saying anything on, I'm not interested. I just need to focus on the charts right now. Here we go. Dollar dominance is coming up, guys, coming into the green vector candle recovery. Bitcoin is faring off really well. Euro is taking a bleed. Unbelievable. Unbelievable. Look at that. Bitcoin's going to hold out, hopefully. Hopefully, Euro can try and come back up. But this is what it's all about, the madness of the chart. Look at Euro taking a phenomenal... I am so tempted to try and get involved in this action. I'm trying my hardest to focus with you guys. And we ain't even had the FOMC press conference come out yet. We've got 30 minutes of them reacting to this madness right now. They paused. Okay, that's good news if they paused, but what are they saying? 5.25, we're expecting that. Interest rate pauses. Is Euro going to snap back up? Ideally, that's what we'd want to see. Dollar dominance. You got to be careful with dollar dominance, guys. NASDAQ is still coming down. There's inconsistencies right now, and Bitcoin is doing a good job of holding out. I will say I'm really impressed with Bitcoin holding this range right now, because as long as Bitcoin can hold it, then we're going to start seeing the flavor. We know they're going to pause. Interest rates are flat at the 5.25%. Happy days. Now, we don't even have the beef of the actual FOMC meeting until the press conference starts. That's when we're going to start making sense of what's to come. But the projections are there. What are they saying? Statement is out. They maintained the rate. Yep. They're expecting 2 more rate hikes in the forecast. 2 more rate hikes. So they could suggest maybe 25 basis points or 50 basis points collectively. So 2 25 basis point moves. We're only going to be... I bet Powell's going to turn around and say, it's all going to be data driven. That's it. Like he did last time. And then the market won't do anything. That's what frustrates me about Powell when he speaks. Here we go. Dollar dominance. I don't think the market likes what they're hearing right now. They are not liking this. Euro's taking a bleed, man. Oh my days. I've got to exploit this bad boy. Euro is making a significant move. I'm just tempted. Oh my days. What is it doing? Daily open, tap, bounce. That's what I'm waiting for. But we've got 11 minutes until the vector finalizes, which they could pick up steam. Okay, so investors don't seem to be too happy about that. NASDAQ could be coming down to figure that gap in the chart. But you've got to be very careful, because you can see it spiking down, spiking up. You've got to be so careful. I mean, even what we are now, 5 minutes nearly out of the news, and we haven't really got a clear direction as of yet. Okay? So it's Euro's gone back into the green vector candle region that we've seen right here. That's really important for us. Bitcoin's moving away from the VWAP, guys. Support should come in on Bitcoin if it does break towards the psychological low. All right, but dollar dominance, the start of the next candle will dictate if this move means that they're getting ready to actually bring everything down. Okay, that's going to be the proof of it. All right. Because if you were to try and take a trade right now on the idea of a red vector candle coming in, so if you were hypothetically going to take a short on Euro, okay, then you'd be in a situation where they could open the next candle in the next 10 minutes, all right, and then come back up and recover 50% of that red vector candle. Likewise, Bitcoin has now fully recovered the green vector candle. I'm not seeing any vectors inside of Bitcoin just yet. Is that a red vector? Yes, it is. That's a red vector candle. So just bring that up right there. It's breaking away from the VWAP. All right, so they've done the stop run, come back down. Now we're going to see if they're actually going to trap traders in here in shorts to see the start of the next candle to try and reverse it back up. But they're going to pause, and that's what investors want. They want the pause, and this is what we're waiting for. We're waiting for the market to digest that. Let me see if there's anything coming out in terms of volume on Ape. Here we go. Just want to check some altcoins. Is there any big volume coming into altcoins? Nothing much just yet. Not really seeing anything. Let's go to the marketplace. Click that bad boy. Call options are being liquidated right now. Okay, so a lot of calls are open. So go back into the chart. Bitcoin still holding. Euro still going. Dollar dominance looks like it wants to go for it, man. It's always going to be set up to do that. It's unbelievable. I'm just so tempted. So tempted. I've got to wait. I have to be disciplined. Got to wait for them to bring that flavor. Bitcoin going into the VWAPs, moving away from there. Liquidations have come into that point. We didn't get the 26.1. Well, we got 26.100-ish. Okay, look at that, man. They came towards that zone, missed it, took the liquidations, ripped it back down again. I am so tempted. FOMC, here we go. Got some notifications here. What are they saying? FOMC projections, the dot plot from June. Yeah, no, I'm not really interested in that. I want to hear what he has to say. I think dollar dominance wants to go for it. But remember, we're waiting. Always wait until you see a vector candle and news play, okay? Wait for the start of the next candlestick, all right? Because right now, everyone's rushed into the chart to go short, all right? So now they're waiting. Oh, what's going to happen? Here we go. Oh, man. It's 8 minutes. 8 minutes of flavor. Could we see that? It's going for it, man. It's actually going for it. Bitcoin's going down. They could hit it, man. They could actually go for it. They're going for that liquidity. Here we go. 500 Bitcoin right there. I'm tempted. It's tempting. Going to see if they can actually initiate this move lower with euro. Interesting. Daily open. Dollar dominance coming up towards its daily open. This will be interesting. Doesn't look like the mark. NASDAQ does not like it. NASDAQ's taken a bleed to the downside. Oh, my days. 24K incoming. Wiggle your toes. I need to be careful what I read, man. I can't be reading comments, especially ones like wiggle your toes, Tino. All right, then. It looks like the market doesn't like what they're hearing, okay? 2 more interest rate increases. That's going to affect the tech stock market like NASDAQ, which is why you're seeing NASDAQ taking a bleed to the downside, okay? And we ain't even had the press conference yet, man. That's what's interesting about this. Bitcoin's taking a bleed. It's going down. Nah, it's bad news. Doesn't look like they're liking what we're hearing. Don't look like it. We just zoom out on the book map right here. Here we go. We've got any liquidity. We've got 25,300. We've got 600 Bitcoin orders coming in. Dollar dominance on the bottom right seems to be winning. Euro seems to go in for it. It looks like it's going to try and collapse. Breach its daily open would be on the cards for euro because they're picking up steam. But we've got 7 minutes until the vector candle finalizes. So we've got to be very cautious with this. Bitcoin could take that psychological low, but it's all about the up and down before it takes it. Look, Bitcoin's shifting out, ladies and gentlemen. Are they going for the liquidity? Where are we? Here we go. Let's go into the 7-hour chart a second. Come on, come on, come on. Make that flavorsome move. What are you doing, bro? There we go. Here we are. Those liquidations all the way at 26.9 are sitting nicely. We're not seeing anything go to the 1-month chart. We got who's contacting me? No one. Steve. Not yet. Here we go. Got that pool of liquidity down there beyond 25,000. We've got $15 billion worth of long liquidations at 24. Could be the case, but they're starting to come back up. Daily open on on the dollar dominance. What I'm looking for is if dollar dominance can actually take the daily open, that will pretty much set the tone. But again, 6 minutes until the start of a new candlestick, okay, where they could actually recover. So we've just got to wait. Right now, what they're doing is they're making people run the shorts, okay, until they can then initiate the trap, try and reverse it back up. Because they've got what they wanted. It's the pause. But it's whether or not they follow through with it. Fed officials see 3.2% inflation at end of 2023, 2.5% at the end of 2024. Fed officials see 3.9% core inflation at the end of 2023 and 2.6% end of 2024. Fed officials see US GDP, gross domestic product, at 1% in 2023 and 1.1% in 2024. Not bad, okay? So they want that target of 2%. Now, basically, what we've just read and heard is going to be scrutinized by the guys having the comments in the press conference. That's what we're initially waiting to hear them talk about. See, Bitcoin's come down, trap the retail traders short, okay? That's what's good about this. We always use the vector candles to tell us. Let the news come out, let them react. Daily open on dollar dominance needs to be broken for us to suggest that they're going to just completely rip everything lower, okay? So just keep an eye out. How many of you are actually taking trades on this principle? Dollar goes up, Bitcoin goes down. This is it. Here we go. We've got 5 minutes until the start of a new candlestick. Here we go. Euro bringing that flavor. Trying to come back up. Let me just have a look at the smaller time frames. Okay, so it looks like, yeah, they might not even be finished yet. The daily open would be a valid point to try and take if they can actually achieve that. But we've got to wait and see if dollar dominance can continue with this. It's like investors ain't even happy with it. NASDAQ's taking a dump. Right, Bitcoin still holding the range, and that's the sad truth. It's not done anything. Liquidity at 25,700 shows 1,000 Bitcoin orders. So they've hit those orders and put them back in again. So we could see a little bit more movement to the downside. Gold, what's gold at? Yes, have a look at gold. Hold on a second. Gold, yeah, there it is. Vector candle recovery right there. And we're going to see the proof of the move very, very shortly. There it is, euro. Let's start getting out of these bad boy. Looks like it's the dump before the pump. That would be an ideal scenario. That would be a very interesting play. Let me just change this up. Go to Bitcoin. Got the start of a new vector candle coming into play. Not a new vector candle, but a new recovery of the vector. That's what we're looking for. 5-minute time frame, euro. Here we go. Holding that VWAP right there. This is absolutely madness. Absolutely madness. Here we go. Euros are going to try and come back up. Sharp V-shaped play is what we would be looking for with euro. Looking on the V-shaped plays, that's what we're looking at. They've done well to hold above the daily open. Bitcoin's doing fantastic. Nasdaq's still doing the flavor. Not really giving us much. How are you guys? I'm trying to exploit opportunities. I need to kill those sounds. Here we go. Okay, Bitcoin's doing well. That looks like that order zone right there. 1,000 Bitcoin orders right there hasn't been taken. Okay, so I'm going to be surprised if that actually gets removed as a spoof because they're coming back into the VWAP. This is the proof when we said earlier on today in the live stream. Drop, retrace, okay, below the VWAP to try and bring it back up again. Okay, so we're not really... Look at this order up here. Look at these blocks here. That'll be consistent with them trying to come back up. The start of the new vector candle will put things into... It will set everything up for a move back up. See what I mean? It's just a sharp move lower on euro. But we are in a high move, trending move upwards with euro. So we're waiting for them to bring it up. But I'm just waiting to see if they can actually do the dirty on us. 950 Bitcoin orders, 102,750 on dollar appreciation. Nasdaq's paused. I think they're going to hold it quite sound. Like they're going to be holding it very well. They're going to hold the range. They're going to hold it. Nothing much is probably going to happen yet. Yeah, wait for the vector candle to start. Here we go. In 2 minutes' time, the start of a new vector candle is going to come into play, guys. Bitcoin's doing fantastic. Dollar dominance still trying to climb up. It's profit-taking opportunities. They've got the pause that they want. So they do expect inflation to go down. That just signals yippee-ki-yay. What have we got here? Just refresh this bad boy. Oh, what has gone on? Oh, no. Uh-oh, something's happened. Can't even see the chat. Oh, no. Are you guys still in with me? Are we still in the live? Yes, we are. Thank God for that. Jeez, something happened there. Sorry about that, guys. Okay, then, cool. Right, so press conference will be happening in the next 15 minutes. Start of a new 15-minute vector candle has come into play on euro. We're waiting for the one for Bitcoin, 36 seconds. Same with Bitcoin. Hopefully, this will be the proof of it that they're going to try and spike back up. That's what we would be looking for. The next 30 seconds will dictate that. Yep, you can see me. Happy days. Happy days. Wonderful. All right, then we're good. See, we've got another order here. Bitcoin, 889 Bitcoin orders just above 25,000, just near the 26,000 zone, 25,950. Okay, here we go. It's the start of the new candle. Is it going to come? Should be now. Should be now. Here we go. Dollar dominance to the right of the chart, guys. Let me just get rid of this volume profile zone. Happy days. Here we go. Here's the proof. Here's the proof of this move. Can they do a recovery? Naturally get them to try and come and recover some of the wick, but we want to see a little bit of a recovery of the vector candle. It's been a flush on the liquidity. Hopefully they recover the green vector candle on dollar and then bring it back up, bring everything else back up again. So we're going to see the proof of that. Here we go. Looks like they're going to try and do it. Got to wait. There's nothing else that Powell can suggest to the markets now. Everything is in the favor of the pause. So now we're going to wait and see if they can actually do this. Can Euro make a move up? Then Bitcoin will follow. Dollar dominance goes down, fully recovering the green vector candle. The trappings of market maker. Take some profits, load up, and then reverse and continue with the move to the upside. Here we go. Are they going to do it, man? They've got to do it. It's just consistent with it. Here we go. There we are. Come on, Euro. Make the move. Bitcoin, do the same thing. Look at this area here with Bitcoin. 880 Bitcoin orders there. That order down there at 25,700, acting as a bit of a spoof. Not really getting taken yet, but I'm hoping that they cancel it. It's getting thicker as well. Dollar dominance not really showing the signs just yet. Come on. Yeah, nothing much will happen. I'm in agreement. The pause, if they pause the interest rates, okay, for a period of time, then it just allows the economy to try and catch up to the idea of how expensive things are across the board. Because high interest rates are going to affect tech stocks because most of them accumulate debt to conduct their business and they are prone to interest rate increases. That's why NASDAQ moves so aggressively during the interest rate decision. So now we know 5.25% on the interest rates is where we are, with the potential for more interest rate increases. So tech companies now are saying, right, we know it's going to cost us more money in the future, but they're going to keep the interest rates held. And hopefully, with 5.25%, they can actually reduce inflation without the idea of having to increase. They're saying they're going to increase, but we might get to a different scenario in the next meeting and they say, you know what, we're not going to increase the interest rates, okay? So it's going to be one of them ones, guys. Seems like it's all coming down. Are we going to get that? I'm just looking. It's so tempting. So tempting. Are we going to get that? Look, that order got cancelled. Look. That order of Bitcoin right there, 900 Bitcoin got cancelled. They removed it. They've moved it up a bit higher. So now we've got 854 Bitcoin orders coming in a little bit higher. And it seems like they're stacking it up above 837. That is sell orders up there. Bitcoin hasn't done it yet. But they're probably going to hold for Powell to have the conversation. That's what I think they're going to do. Yeah. They're going to hold out. Fed leaves overnight interest rate unchanged. Yes. 2 basis points. Yeah, they paused. Stagflation. It's less to do with debt and more to do with the present value future cash flows, which growth companies have promised this far. This is true. Blue vector candle on dollar dominance down on the right side of the chart. Bitcoin, I will say I'm very impressed with. It's doing fantastic. Look at these orders down here, man. They're soaking up liquidity. Let's go into the chart again. Green vector candle on Euro getting fully recovered. Could be the case right now. They're stalling. Seems to be a bit of a pause. Daily open would be ideal for Euro to test, but they seem to be stalling out. Bitcoin is doing fantastic right now to hold. Where you guys at? How many of you in the live stream? 2,156 of you beautiful people. Make sure you like the live stream, ladies and gentlemen. Here we go. Violet vector candle on the 5-minute time frame on Euro. Seems like there's some interest happening inside of this area. I'm just looking on MT4 on the M5 on the 5-minute time frame. Dollar dominance doesn't look like it's doing much. Why is FOMC? Yeah, it's paused. Well, look, the reason it's dropping is because we know that interest is they're going to pause and the interest rates could actually get increased later on. But it's also profit-taking opportunities. And we know that smart money likes to buy when it drops. So we're going to see the proof of this move very, very shortly. Okay, and once the press conference comes into play, which is the next 10 minutes, we'll know exactly where we stand with everything. Okay? So we're holding out here. This is good news. This is good news for Bitcoin. There seems to be a lot of liquidity coming here, 25.8, and they're holding out here. This is good. Good for Bitcoin. They're controlling this zone. They canceled those orders, so it looks like they filled them higher up. So that means that they could be looking at higher prices. That's what we're looking for right now. No worries, bro. Mad love, Jeff. Mad love to everyone passing through to today. Smart money is, in principle, buying up in this zone. Okay, so it's just now the market is just reacting. NASDAQ has got a big gap it needs to try and fill. If you look on your charts on the futures markets, NASDAQ has got a huge gap it needs to fill, and it may have actually filled a little bit of that gap, not so much. But it's all guys now rushing to dollar. Let me just quickly go over and have a look at the bonds for a second. See how they're reacting to the bonds. Then we'll know. Actually, Aussie yen. That will tell us. Loading up on Aussie yen. Let me go down to the bonds market. Here we go. Yeah, down but not down. Look at that, man. The yields have shot up. That's not good news. That is not good news, but Bitcoin is faring very, very well. Dollar dominance still not able to get... Look at that, man. Liquidity's coming in for Bitcoin. There's a hold. There are a pause. They're pausing it. What are we time? Yeah, okay, 8 minutes until the start of the federal stream. But... yeah, you know what? Why? Okay, look, if you want it to dump, you want it to dump. But quite frankly, like in these sort of environments, these sort of situations are very tricky, okay? Once the news comes out, then you're free to just get on with your day at trading, all right? But we've got another bout of news, which is the press conference. But the most of the information that we wanted has been revealed, okay? So they're going to be like, okay, Jerome, so where do you see the economy in the future? Well, I think everything's going to be looking really good. You know, the employment market is still a bit of a problem because it's, you know, it's lots of people are employed still. And he's going to start giving slurs, little comments. But the bulk of what we need has already happened now. So now we're just going to wait for the market to take on and start doing the flavor, you know? And it's still hot as well. That's the messed up thing. I've got this stupid little fan next to me. The AC's not on, but it's been on all day. The room is pretty cool, okay? Dollar dominance is starting to bring me that flavor. Euro wants it lower, doesn't it? But I don't trust it. It's just, we've got too much of an imbalance in the chart with every reason for them to try and snap back up. And dollar dominance has a habit of doing that. Look, this order here, right? 25,800, 844 Bitcoin orders, and above that at 782 Bitcoin orders. There's a sandwich of orders happening right now, okay? And the start of the press conference could actually start getting everything going. Got a daily open right there nearby with Euro that I'd ideally want to be seeing. When Tino shares, bullish. Put the blame on Steve. Yes. I'm hot, man. I get sweated up in this room. Got all these monitors in front of me and they're burning me up, man. Here we go. Bitcoin. I'm really happy with the way Bitcoin is holding out here. This is how you can see that they are actually accumulating Bitcoin, all right? But we've got these two orders right here you can see on the book map, which are showing 840 Bitcoin above. And at 25.8, we've got 832. Something is brewing here. And you've got this algorithm adding orders at the top side right here. Okay? So we're going to have the press conference opening up very shortly, guys. So I'm going to start assembling the stream. Let's get that sorted out. Okay, then. We're going to do a volume check. Make sure you guys can hear everything. There's dollar at the bottom. You should be able to see that bad boy. Happy days. Yeah, that's good news. And then you've got Bitcoin over here, just slightly above my head. Happy days. Awesome. That should be good enough for you guys. You can see the price points. Let's press play on this bad boy and let's see if we can hear it. Right. Not coming in just yet. That's fine. Nothing is being scheduled yet. That's all good, guys. All right, then. Cool. Tino, you might need to start stripping. The heat is killing. Yes, the street. I ain't stripping, bruv. Why do you want me to strip? I'm not. God, I thought something was on fire down there. Let me just do a check on Ethereum. Yeah, Ethereum's gone down 7.2 lot. It's held this zone really well, man. It just stinks of a move that is due to happen. You'd think that Nasdaq's still going down. They're holding out very well. Wait for this bad boy to come in. Should see a little bit of an advert, I think. And then we'll hear good old Jerome Powell having a conversation. Altcoins. Anything on the altcoins? Let me just refresh this bad boy up. Here we go. Litecoin's taking a bit of a tumble. Quite a bad tumble, to be fair. Yeah. Let me just have a look at Litecoin. Yeah, big sharp move lower and snap back up as well. Sad days for Litecoin. All right, we're waiting. Here we go. I hope you're enjoying this, man. Listen, UK. Listen, UK is rough. The heat is wrong. All right? I wouldn't even tell a friend about it. It's just terrible. I hate it. It's just not the right heat. Oh. Let's get this here. That should be fine. For anybody new passing through to the channel, we have got Bitcoin on the far left, Euro in the middle, dollar dominance at the bottom right, and then we've got Bitcoin on the book map waiting for Powell to have this conversation. Live from Kenya. Happy days. Where are you guys from? Where are you all from? Give me your countries, man. Where is the love right now? Euro's doing great to hold out. Lots of accumulation happening here. Dollar dominance. See, it's not moving, but it's moving. It's moved, but it's not. I ideally want to see a snap back down. They've come back into the vector candles, and they've only come into the same spot that they sold from. Texas. What have we got? Don't go to Florida. Yeah, I know Florida's hot. When I speak to Mike, he tells me it's bloody madness over there. US, Norway, Paris, Malaysia, Portugal, Cyprus. Where's the Greek gang at? Bitcoin 28 incoming. Okay, fair enough. We want to see that. We do want to see that bad boy coming into play. Only Powell can do that. Only Powell can give us that flavor. Nasdaq still holding well. South Africa, Kuwait, Holland. Gotta love, mad love to my guys in Deutschland. Not Deutschland, but, you know, Dutchy. Past the Dutchy, you know. Nigeria, India, Chile, Cali, Toronto. Got the Drakes up in here. There is accumulation happening as we speak. Vietnam. My days, man. Yorkshire. Where's my guys from the UK at? Where's UK at? Romania. Okay. Another Texas. That is wild, man. Thank you. Thank you so much. That is crazy. People from all over the world, man, checking into the Traders Reality stream. If you haven't done so already, get subscribing to this channel where we bring you the flavor. Absolute madness. Texas again. There's a lot of people from Texas, man. New York. There we go. Birmingham. Yes. Ecom King, what's good, bro? Look, Bitcoin showing us a promise. Estonia, Zanzibar, Lebanon, mad love, Scotland, wicked, London. Where my Greeks at? Where the Greeks at? Bristol, Egypt, Illinois, Robin Hood County, yes. Manny on the map. We know that. We know about Manny on the map. Okay, then, look. Powell should be speaking any moment right now. Ladies and gentlemen, let's get with this flavor. Let's keep an eye out on dollar. Let's keep an eye out on euro. Press play. Should be happening. I think it's going to start happening very shortly. Let's get the volume up, guys. And here we go. All right, then. You should be able to hear it. Oh, my thing. About to sneeze. I'm going to smack on the headphones and listen out. Can you hear the sound, ladies and gentlemen? Yes, you should be able to. Can you hear it? This music, man, if you can hear this music, this is not the music that you listen to just before Powell speaks. What they just did to the market, man. Wicked. Oh, come on. Come on, it should be now. 7:30. Here we go, ladies and gentlemen. Here we go. Listen to this mad music, man. Come on. Well, we got the orders down below on Bookmap. Still 760 Bitcoin orders. Not really giving me anything just yet. They've actually halved those orders. Look. No, it wasn't. No, they haven't. They're actually slowed down on it. Look, it's turning yellow. So that might be them getting rid of everything. International Space Station. Wow, bro. International Space Station. Well, Bitcoin isn't doing anything. And they need to stop playing this sad music. Come on, man. Here we go. Big vector candle right there on Euro. Just waiting to see if they can fill that gap. Isn't that the double... the Jeopardy sound? I want to go onto YouTube and watch it. There must be a delay. 31 minutes, man. Should be coming up now. Let me refresh this. Is it playing? There we go. Happy days. We're in. We are in, ladies and gentlemen. Here we go. So we're going to be listening to what Powell has to say. There's little Bitcoin. They took those orders nicely. There's the man himself. Yeah. Here we go. What are you looking for, bro? He's smiling.
Good afternoon.
Afternoon.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. Okay. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
Okay.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Okay.
Since early last year, the FOMC has significantly tightened the stance of monetary policy.
Maldives.
We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
That's not good.
In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy,
NASDAQ not doing anything
from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time.
Okay.
And I will have more to say about monetary policy after briefly reviewing economic developments.
All right, here's the economic. This is the stuff that we need to hear.
The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates.
That's true.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment.
Not really saying anything.
Participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer run.
He's effectively reciting the statement. Okay, so nothing really has happened just yet.
Payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance.
Okay.
The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years.
Dollar dominance coming down.
Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers.
They're not doing it, man.
FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year.
Here we go.
And 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%.
This is important.
Excluding the volatile food and energy categories, core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%.
See, most of what he's saying we already know.
Somewhat
so he's recited all of the news announcements we've had this week and last week.
To run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
That's decent. We've got some nice flavor on Bitcoin right now.
Monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Okay.
As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year.
Okay, we know this.
Meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025.
Could have a terminal rate here.
For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
This is where it gets interesting, ladies and gentlemen. Here we go. So he's given us everything that we already know. So, Financial Times.
What gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated? Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So, I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there
What a
was
guy.
no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. One, decision hasn't been made. 2, I do expect that it will be a live meeting.
Interesting that he said
Thanks,
that.
Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this, sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, you know, all three of those kind of point in the same direction, which is, you know, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And, you know, I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply conditions, supply-side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's, again, probably going to come slower than we would expect. That leaves, you know, the big sector, which is a little more than half, pardon me, of the of core PCE inflation. That's non-housing services, and, you know, we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive, and I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting that there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
I'm not saying really anything, guys. Here we go. So everything's getting recovered right now. Vector candle recovery. Happy days. Now we're going to see. Here we go.
Wall Street Journal.
Wall Street.
Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
Wow.
So, first, I would say that the question of speed is a separate question from the question from that of level.
He's rattled him.
And I think if you look at the SEP, that is our estimate, our individual, it's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting, it's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you can from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
That was a good question. I like Wall Street. He's known for these questions.
Thanks for taking our questions. Gina Smilek, New York Times.
New York Times.
Obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. And
you can tell that he's skipping the answers to the questions. Sorry for cutting it off, right? But he's skipping the answers. She's asking, can we get above 5.6? And he's never going to tell the market that it's going to be above 5.6. It's done at 5.6 till the next meeting, which is why he started going on about it earlier, that I just want to say it's on a meeting-on-meeting basis.
appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5, 6? Is it 6? Where's sufficiently restrictive? Thank you.
What did he say?
I would say again that I think that over time,
Say
the
again.
balance of risks
God's
has
sake,
moved
man.
from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes. I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going.
This is what we know.
So I think what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, with more data over time.
Pointless. I've just burnt your ears for no reason.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions.
Washington Post.
I wanted to ask further on the lag effects. When you're considering when you would
Boring
hike
question.
again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, and that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate. I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation really, really flattening out reliably and then starting to soften, I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
It's very boring. It is.
Thanks.
He's not
Chris
saying
Ruger,
anything.
Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So,
all right, ladies and gentlemen,
are in place. I guess
I'll tell you what.
The flip side
He's
of
not
Nick's
really
question.
saying. He's not really saying anything. These guys are asking intermittent questions in the sense, what do you think about lags? And the nitty-gritty stuff has already been given to us. Okay. The key takeaway for it is when he reiterated and said it's going to be on a meeting basis. All right. Cool. So in my head, I heard 5.6. That could be the terminal rate. The charts are going to try and price that in right now. Okay? Now, let's get to the charts, ladies and gentlemen. It's been a pleasure actually listening to Powell, but unfortunately, my guy has been very boring. Okay? Now, what can we learn from all of this? You can see the stop run played out. They dropped everything to lift it back up again. NASDAQ showing a little bit of a promise now to start coming back up. The news has been absorbed. Now, Bitcoin is just, again, stop run lower, come back up. Okay? You're going to get this with Bitcoin, but with Forex like Euro, look how it just sticks to the game. Okay, comes back down to the green vector candle recovery to the T to only bounce away from it. So this blue vector candle recovery zone right here is very important. Why? Because then that suggests that there's still more momentum to send price higher. But we've got a bit of a problem. The 30-minute time frame on the dollar dominance down below right here, they could actually recover that red vector candle. So we've got to be very careful inside of this zone. All right. So if they are happy with what's going on and we're all good, then everything should continue with its move up. Powell has not said anything interesting. So this is where we are right now. Now, let's just go and have a look at Ethereum for a second. Where we at? Here we go. Look, I think that tonight in Asia, that's when we're going to see the move. Asia will bring the flavor tonight. All right? So what you want to be careful of is wherever price ends up for Bitcoin from now up until the close of the Forex market, well, the start of the Sydney market, which will be happening in the next 2 hours. Okay? So when Sydney opens, that's when we pay attention. All right? That's the dead gap time. Now, when that opens, you want to go into the smaller time frames with Bitcoin, and you effectively want to see green and blue vector candles appearing at the lowest point right here and holding within this range, all right? Because there's a reason why they've held the daily open during FOMC. No clear definitive move higher or lower, okay? They've just brought it straight back into the range. And you can see it's sort of consistent with accumulation, if I'm quite frank with you guys. Because look what's going on here. They're still flat at the VWAP. There's nothing there. But there is an interesting amount of liquidity coming inside of this zone. So Asia's going to spike the charts, all right? Zoom out, have a look at above what you can see here. What have we got? There we go. Liquidity at the top side and not so much down at the lows, all right? They're playing the range. It's going to happen tonight in Asia. That's what I believe, okay? Cool. Now, with that being said, just quickly go back into the altcoins. Have we got anything on the altcoins that have done anything that will grant movement? Litecoin, Ape, BNB are the only ones with the liquidity right now. Let me just go to the altcoins boss list and just have a look at what altcoins are actually giving us some flavor. Wait a second. There we go. Any short in CTSI? Look, big move up on CTSI. There could be potential shorting opportunities happening with an aggressive move like this in the altcoin, so just be mindful of that. Mark off the vector candle recovery point. 50% of that zone would be right there for that coin. Algo, of course, working its way back up, slowly but surely, coming into the vector candle recovery. Link, same story. We've got that flavor right there. Let me just go over to Ape a second, because I know you guys want to see that. Here we go. Ape's breaking down, man. Ape is breaking down. Let me just go and have a look at Matic, because I know Matic likes to make some flavor, some moves. Here we go. Matic slowly coming up. There we go. Nice, slow. It's going to be a slow climb, all right? NASDAQ is showing some promise. Now that Powell's pretty much done with his conversation, we're going to start seeing some flavor coming into the chart going into tonight, okay? Now, whilst we're doing that, go to USDT right here. Still no movement. So people are a little bit up in the air about where it's going. But like I said, it's all about tonight in Asia, all right? We've effectively got the pause, okay? So this is where, from now till then, you wait until Asia kicks the party and gets things going. Bitcoin has done wonderful to hold the ranges today. I'm looking for this wick. I'd want the wick to be taken at some point with Bitcoin, okay? So just be mindful of that. And if you are new to the channel, guys, get over to Traders Reality website, follow these 4 steps to get into Discord, download the indicator as well, because the indicator is free of charge, all right? Check out the Patreon. You can join the gang there. Download, literally follow the links, read everything, and it gives you everything that you need regarding the hybrid system. And ladies and gents, it's been yet another great FOMC. Powell has spoken nothing but breeze, wet, air talk. We got everything that we needed in the FOMC projections and the statement itself. Now we're going to have some fun with trading. Mad love and respect, guys. I hope you've enjoyed that. Take care of yourselves. Peace.